Hey traders, Cousin Benny coming to you from theclosingprint.com on December 14th, 2014. In this video we're going to cover the indices. Tick Cumulative is still on a bear cross sell signal. NYSE is still on a bear cross sell signal. SPY has been on a sell signal since last Monday due to the divergence on the daily stochastic as well as the MACD cross on the 1939.9 duration. Setups in the second part will cover the sectors that we're looking at, the strongest industry groups. Everything was pretty much down on a percent change basis last week. So we'll be looking at groups to focus on going into Monday, Tuesday trading. Okay, so let's look at the spiders. As we indicated early in the week on Monday, we were watching these higher highs and the lower highs developing that indicated we may see a sell signal in the very short term. We had this volume by price bar resistance. We had the EMAs stalling, the 12 and 26, which reflects the intermediate term MACD, as we could see, and we anticipated a sell signal on Monday. We got that sell signal and it was off to the races. We saw the histogram moving more negative and we just stayed with that trade. So we were basically trading bounces to the EMAs and the resistance levels above on the spiders. If you follow that trade, we also used a 5-minute for entries and exits. From a weekly standpoint, we see the uptrending EMAs that have been continuing to aid support on the upside. So we're looking for a bounce, maybe a move lower, gap down on Monday to support. If we look at the daily again, what we're thinking of is a push down to these volume by price bars. We're already at one as of Friday. We also had this previous breakout level on September the 19th, 201.90. So we could see a gap down to this level, which is also the 382 Fibonacci level. Okay, so here are the industrials. I didn't notice this until this weekend when I was reviewing the charts, but we had a sell signal going into Sunday as well, but we had these previous stochastic divergences where we had a higher high but a lower high in stochastics, and each of these occasions was followed by a move to the downside. We saw this on the industrials prior to last weekend right here on this lower high as the industrials continued to move higher. Now what we've done is set Fibonacci levels from the October 15th low up to the recent highs, and then a retrace Fibonacci level down from this volume by price bar, which we're anticipating we could see a gap down to the 382, maybe a hammer, and then a move higher into Christmas. And then we'll watch the 382 level, which lines up with this volume by price bar, as well as the 50% level. So we're looking at that as a target going into Christmas week. We're watching stochastics oversold and possibly turning up more than likely. We'll look for a buy signal on the shorter term 514.5 MACD. Okay, we use this for our buys and the longer term for sells. It'll keep us in the trade longer. Let's take a look at the Russell. We can see the daily chart with the 50 period moving average, the blue line, and the 200 period just below prices. We had this shooting star on Friday. We're thinking we could see a bounce here. This extended trend line as well lines up here at around 1155, 1150. Stochastics are oversold. It could turn in the very short term, and we're looking for a turn to the upside and MACD histogram indicating that we may see a bounce on Monday or Tuesday. The comp daily faked out a lot of people. I saw some mentions on StockTwits and Twitter that the comp had relative strength. Well, if you thought that on Thursday on the spiders, you got stopped out there as well. So we saw the EMA turning over, the 10 period here, crossing through the 50. We saw that as a possible resistance level. Okay, if you drill down into this, we can start to see that the stocks trading above their 50 period moving average is dropping. We want to see that happen with slow stow getting oversold as well and turning back up before we select an entry. If we look at the shorter term, this is what we're looking at on Friday. We had this rally up to these descending moving averages, the EMAs, and then we turned over promptly at that level. So if you had played it that way, you did quite well, and we would look for a bounce also on the comp in the very near future going into Christmas. Let's take a look at the NYSE, the NASI, as well as NAMO, NYMO, and the tick cumulative. The NASI version, NASI Summation Index, is still on a bearish cross. We could see a quick turn to the upside like we saw last year, right in December, where we were down for a week and then we moved higher. Of course, this is the October 15th low where we got that bullish cross. Now we're on a bearish cross, so we'll keep an eye on that. The NAMO, NASDAQ version of the NYMO, McClellan oscillator, we can see that we're getting oversold and near a zone where we could see a snapback very quickly. So keep that in mind. Looking at our New York Stock Exchange indicators, the tick cumulative, we've been on a bearish signal since the beginning of late November, early December, and we're looking for this to turn back up, similar to what we saw back in late July and also back here in April, where we had a down move and then a move higher. Also note the Elder Impulse system. You want to see at least a blue candle before you start to anticipate a reversal trade. NYMO is down in an area where we've seen reversals in the past. Minus 80 would definitely get us there with a possible move higher in the very near future. And the NYSE, same thing. We're looking for a quick change within a week or so, similar to what we saw back in February, also in October of last year, where we see a quick turn to the upside. We're nearing a zone where we could see a bounce, as I indicated previously. So keep an eye on the NYSE as well. Now, with respect to the US dollar, we sent out a blog post this weekend, which you may want to reference. However, what we were talking about was the 200 period moving average on the monthly, resistance levels right here, and a larger bullish pattern. We looked to previous occurrence back here in 95, the end of the tail end of the go-go 90s, where we saw similar strength in the US dollar, and the indexes obviously continued to move higher as well into the year 2000, 2001. So we looked at relative strength on a monthly basis. We're similar to what we saw in 97, 98. And we're anticipating we could flag here and then possibly move higher. Note previous levels of support and resistance, which we've indicated here with the dashed horizontal lines as well as the red zones. So we could see further upside on the dollar, which would affect the price of crude, obviously, and other commodities. But it looks bullish for equities from my camp. So again, that's just my opinion, but I'm looking at what the charts did in the past and how it affected the markets in general. So the question that I posed on the blog post was, where do we go from here? So I need to start thinking about what happened from 95 to 2000 when oil also dropped and the US dollar continued to move higher. Looking at light sweet crude on a monthly basis, there's the 95 through 97 period. We peaked and then we moved lower. Then we started putting in higher lows, and we had this bullish pattern peaking in 2008 at $147 per barrel. So we're at a trend line right now. We could see further weakness in the crude oil prices, which has its own ramifications that you need to do your own homework on, but I have some thoughts on what might occur, and I'm planning accordingly to anticipate what might happen in the near future and longer term over the next few years. So we saw lower prices down to 1065 from that 1996 peak, and then continued higher into 2000, despite the fact that the US dollar is moving higher as well. Now, as far as the weekly chart on WTIC, we're looking at this Kirby pocket. We do have some levels of support in here that we could possibly start seeing buyers step in. Note, stochastic on the weekly has been embedded since late July, August, and we're looking for that to turn as an indicator, and we'll also be watching MACD. Now, looking at bonds, we mentioned that on Friday we went flat on our bond positions because we're outside the second standard deviation Bollinger Bands, and there's a third standard deviation in between here. This is the fourth standard deviation, where we saw a peak at 127.08 back on October 15th when we had the Ebola second case. So we're looking at RSI is overbought volume, and we're expecting to see a pullback in TLT that we can buy again like we did here 4 weeks ago when Bollinger Bands were very tight, and this showed up on the Bollinger Band TTM scan that we send out from time to time. Note that slow stow and MACD continue to move higher, so we're expecting to see this turn and at least flag out down to the 10-period EMA, possibly on TLT. So we're flat bond positions in our 401k. The shorter term 7-10 year, we see the same thing, and of course AGG, the Barclays Aggregate Bond Fund, we saw a spinning top doji on Friday. So we're flat bonds currently going into these next 2 weeks of December. Okay, so let's look at some setups for the week. First thing we like to do typically is to check the sector summary ranked by percent change on stock charts to see what sectors are doing better than others. We note cyclicals and utilities followed by staples. So we'll keep that in mind as we scan through sectors and scan setups, that we'll be looking for sectors that didn't get hit as hard as, say, the materials or the financials or energy sectors, the bottom three. Now, if you're thinking shorts, I'd be looking at these bottom three categories here of those sectors. So if we look at cyclicals, rank again by percent change, we note the top performing industry groups, keeping those in mind again when we go through our scans. So let's take a look at some of our scans. Okay, so here are my chart lists, and we can see the indicators that I typically use on a daily basis. But here are the pocket pivot scan for the week. We're going to look at these 10 per page. Now the idea with this scan is it looks for increases in volume. Okay, so that's what we're looking for. Spikes in volume greater than the previous 10 days as an indication of either selling or buying interest. Adobe Systems had a gap up, huge volume. Note slow stochastics is turning. MACD looks like it's going to give us a cross. We're above the 10 EMA. So what we look for here is a consolidation in the next few days for a possible buy on Adobe. We wouldn't chase it here, obviously. We'd look for a pullback to breakout over the next few days, while our stochastic and MACD give us more bullish signals and possibly some positive or bullish divergence going into the week. Agios Pharmaceuticals, this was a name that showed up back in September, August, I believe, as a high tight flag when it increased from $33 a share up to $69 a share, 100% increase, flagged sideways, and then it was off to the races. So continue to see this move higher, a nice 90%, 95% increase in share price since that first flag on a high tight flag scan. Maya Gaming, you might note that we saw this one back at 1136. We got in at 1160, and this has since gone on to a couple of doubles, and we saw a gap down on Friday. So we're watching this one to see how it develops over the next few weeks. American Electric Power, we noted that electric power companies were doing quite well in the utility sector. Remember, XLU was one of the top sectors next to cyclicals. XLY, Becton Dickinson, flagging out, holding between the 12 and 26 period moving averages. Slow Stow is oversold, lower low on Stochastic, and a higher low during that time period on Becton Dickinson. So that's fairly bullish. Burlington, a cyclical stock, nice little flag here, breaking higher. Moving averages have continued to move higher, so we'd only trade this in the bullish direction on pullbacks to either a breakout, pullback to breakout, or the moving averages for an entry. With Slow Stow turning higher and MACD turning as well, it looks like this is going to continue to move higher. Centene, note the spike in volume. We're at a breakout level. MACD looks like it's going to turn higher. I would keep an eye on this one. Possibly move sideways, flag until MACD turns, and that'll be a good signal that momentum is definitely behind the stock and could see higher prices. Nice looking stock here. CST brands and staples and food retailers. Remember, consumer staples was number 3 on the list, below XLU. Holding the 20 period moving average here. Two just sellers at these highs. Bollinger Bands are tightening. Slow Stow is turning. Watch for MACD histogram to give an indication that this is going to continue to move higher. If this stays up here, this could be a good trade going in the next couple of weeks. We have a descending little flag pattern here back to the 26 period moving average. Darden Restaurants, a cyclical stock in the restaurant industry group, holding the 12 period EMA here, with Slow Stow oversold. MACD is positive above the zero line and could turn back up, so keep an eye on the MACD histogram on a lot of these restaurant stocks. DSW Shoes, nice flag pattern. I really like this one. If we see a push higher, note the volume is increasing. Again, we're only trading bullish setups where moving averages continue to move higher, utilizing box trade technique. The shorter term period moving average is above the longer term. The 12 is above the 26, so we're only taking long trades, pullbacks to the EMAs, and then a move higher with stochastics and MACD indicating the setup. Entergy, another name in the conventional electricity business. We pointed this one out, a breakout of this level that happened on Thursday, despite the spiders moving lower since Monday. We had relative strength. We had a huge burst in volume last week, 4 million shares traded on Friday. MACD is turning back up, Stow turned back up, and prices above the 10 period EMA. Now, I wouldn't chase it now. Obviously, would wait for a pullback to breakout and then a commensurate move to the upside on volume. Freescale Semiconductor FSL, note this nice pennant pattern at previous highs right at this volume by price bar. MACD continues to move higher. Looks like the momentum is slowing, obviously, with this pennant. Watch for Slow Stow to get oversold again and a possible move on this one. If we had a pullback here to this previous breakout level and a 10 period, the 12 period EMA catching up, this could be a possible move, a possible bullish trade in the near future. Okay, so this is Cousin Vinny coming to you from theclosingprint.com. For you new traders, be sure to check out these top 5 or 6 videos, which will give you a better edge on understanding the markets, taking setups, and where to position yourself for the highest risk reward on your trade. In addition, if you don't subscribe to the blog, this is a spam-free site. Enter your email address in here and you can get these delivered to your email every day. You'll note my tweets are here, the watch list for the week or the day. You can just scroll down through these, keeping track of the trades that we're looking at, whether they're high tight flags or Bollinger Band setups. It's also a place for me to document the trades and thoughts going into the weeks. So I hope this helps. Take care. We'll talk to you on the stream on Monday.